trader, Tina here once again from ShortMeTina.com with my daily recap. Happy Tuesday. So today we're going to skip the intro. If you're curious as to what our intro is like, just click on any video that I've done within the past year. If you want to know our mission statement, definitely head on over to ShortMeTina.com. It is right there. But I'm going to welcome you. So if this is your first time, welcome to our channel. If you're returning, welcome back again. I just really wanted to get into what happened today in the market, right? What a difference a day makes. So before I get into the recap, right now what you're looking at is the S&P 500, the SPY daily chart dating back to 2017. So as you can see clearly, we're up about 1.2% on the day, closed at 287.31. So when yesterday appeared like Armageddon, today it was like, well, did yesterday even occur? Now, I'll be very honest with you, although I am short the market, I'm short the SPY. I honestly thought that there would have been a continuation of what occurred yesterday, especially when you paid attention to what was going on in after hours. Granted, yesterday we closed at, where did we close? Yesterday we closed at 283.82. We went as low as 281.72, but if you had checked after hours activities yesterday, the SPY went as low as 277, essentially under this what was once resistance, now clearly acting as support line here, this reddish burgundy line. So today we didn't even revisit yesterday's low, right? We opened up at around 285.91. The low of the day clocked in at 284.28. So we didn't even retest yesterday's low. On some levels, we got close to yesterday's high. Not quite. Yesterday's high clocked in at 288.21. Today's high was 288.04. Close but no cigar. You can see that buyers actually came in today. So for me, I'm going to remain short until my trading plan tells me to exit my short position. But news aside, if I was to just focus on the technicals, right? If I was to just focus on the technicals, no matter what was going on yesterday, the fact that I hit support here should have been my cue to actually go long or to close the short again. But considering what was going on in after hours yesterday, I thought there was going to be more of a bit of a crater. I knew we were going to get that bounce, but I thought at least opening up, we were going to crater a little bit more before getting that bounce, not knowing we were going to open higher and essentially go on to retest yesterday's high. There was one point in the market where I thought things were gonna turn over, but that wasn't the case. Buyers stepped in again. We closed at 287.31. So we're still about, I don't know, maybe 4 to 5% off of all-time high. So again, I am cautiously optimistic. I still do see that 320 price target in the SPY for the ending of the year. Again, that's just my opinion. I do see the SPY still hitting 320, but I'm expecting pullbacks along the way. We had that pullback yesterday. I think it was something around 6 or 7% when you factor in the 302 highs a few weeks back. But even with that 7% correction, I thought it was going to correct a little bit more. Maybe that's all the market has to give, and it's ready to go on to achieve all-time highs. But in the meantime, I'm going to remain short until my plan tells me to exit, or until my plan tells me otherwise. So heading into tomorrow for the remainder of the week, I'm definitely going to be paying attention to, obviously, that 288 level, the high of yesterday and the high of today. And I'm also going to be paying attention to the low of yesterday and the low of today, as well as how we open up. So if we open up tomorrow below 287, we take out today's low, then chances are that continuation move that started after Fed J. Powell cut the rates might continue. So at this point, blocking out the news, just going to focus on the technicals. So what I'm going to be paying attention to heading into, again, tomorrow for the remainder of the week, I'm going to pay attention to, again, the high of 288, not to sound repetitive, the high of yesterday and today, which is around 288, how we open if we open up below 287, as well as today and yesterday's lows, all right? So that's what I'm paying attention to. What else? All right, now we're looking at the IWM daily chart. Similar story up on the day, up about a little under 1%. I see a quote here of 149.33. This is a daily chart dating back to 2017. You can see the channel. The highlighted area is where we violated the channel. Here we sprung to the upside. Here we kind of broke to the downside. Hence why I like trading channels, because look what happened, right? We got the bounce here. We got the bounce here. Here, we got the bounce here, and then we got the bounce here. Hence why, again, I think it's super relevant statistically, at least in my opinion, in the channels that I've seen, statistically, they generally work. Obviously, nothing works 100% of the time, but they work often enough that I do like to trade them. And I'm going to link again how to trade a channel. So look what happened yesterday. We went as low as 146.21. After hours, continued selling. After hours low came in at 144, which essentially is right on the support level here, which is this red line. And then look what happened today. We had that bounce essentially being up something like, let's see, about 5 points, right? About 5 to 6 points. Closed at closed at 149.33. High of the day clocked in at 149.70. Look at volume poured in. Not quite to the extent of what we've seen with the selling here, but nonetheless, you had some buyers stepping in today. Now, will that hold heading into tomorrow? I don't know. Similar to the spot, I'm going to be paying attention to how the market opens up. And in particular, today's low of 147.38. If we open up below 149, take out today's low, take out yesterday's low, then chances are the selling, in my opinion, that started when the rate cuts ensued will perhaps continue. But we're not there yet. Let's just continue to trade our plan. What else? All right, and then we have Bitcoin daily chart. We're off about close to 4% on the day. I see a quote here about $11,300, a little under $11,400. Yesterday, I thought the things were getting ready to. I thought we were getting ready to go. Right, we went as high as we went over 12,000. So I was like, yeah, this is it. This is the move. Actually, it wasn't the move. Couldn't sustain that, and now it seems as though that we're pulling back. Have I changed my bullish stance on Bitcoin? Absolutely not. The fact that we've managed to remain above 10,000. Now, this is not $1 or $2 or 100 or 500. This is $10,000. The fact that we've managed to remain above $10,000 since this breakout here, more or less, tells you that, well, you know what? There is a need for this, right? People are buying into this. So in that regards, I'm still bullish on Bitcoin. Do I still see it hitting at least at minimum 40,000 year? And yeah, with Bitcoin, you know, the run up that happened here, let's go back to 2017, right? The run up that happened from from a low of like 5,000 to a high of close to 20,000 occurred in the span of, let's say, under 2 months. Under 2 months. So the year still has about 4 months left. Let's see if I'm doing my math correctly. I believe I am. So the year has about 4 months left. The last run up that took Bitcoin from 5,000 to 20,000 happened in under 2 months. So I say that to say that this is the type of commodity that can actually run. So given that, yes, I do still see Bitcoin at some point hitting 40,000. However, there are hurdles that we need to surpass. Obviously, we need to remain above 10,000, which we're doing a relatively decent job at doing. We need to 100%. We need to take out 13 and 14,000. Again, the minute we can take out 13, 14,000 and hold, 20,000 is right around the corner. And if we get to 20,000 again, that's where I think FOMO steps in, and then you'll have people entering the space. But give it some time. I'm still bullish on Bitcoin. What else? All right, and then we have our Disney daily chart dating back to 2017, January of 2017. We closed at 141.87. Company reported earnings today after hours. You had the selling. I think we're off something like north of 4% in after hours. The last quote I saw was 136.68. So some selling pressure here, but we've still managed, in my opinion, to remain above that base that we've been forming after this gap up here that took place in April of 2019. So am I bullish on Disney? Absolutely. In fact, I'm hoping for the stock to come back some more so I can add to my already existing long position. So full disclosure, Disney was a trade we took in the premium member community. We went into this trade, I want to say, in the low 100s. I've maintained essentially, obviously you want to take profits here and there, and now I'm just kind of waiting to deploy more money for that next leg up. What do I believe is the next leg up? I believe the next leg up would be a move to 150, a sustained move. So that means that we're going to get to 150 and we're going to hold that. That's going to be the floor now as opposed to being the ceiling. Right now, 150 is the ceiling. You can see it here. 149, you can say that. So right now 150 is the ceiling. For me, that next move, perhaps after it comes back down, would be above 150 and to hold. And I do see Disney at some point. I said year end hitting 150 to 200. I still think that that's a possibility. What else? All right, and then we have a Zynga daily chart up about 1% on the day. So even with the massive selling that occurred in the entire market yesterday, did it pull Zynga down? Absolutely. But even with that, hence why I usually like to focus a lot on the technicals and make the news and the fundamentals on some levels noise in the background, because despite all that went on, support still held, right? Zynga has been trading within this channel since this move up off of off of the November lows of, let's say, the low threes. And full disclaimer, full disclosure, this is another trade we took in the premium member community, and I am still long Zynga. I still believe that this can hit $8 by 2019. So again, after this move up that started in November, more or less Zynga has been range bound. We can say the lower end of that range clocks in around 580. The upper end of that range clocks in around let's say 650. And again, even with that selling, what happened yesterday? The low clocked in at 586 before we had that bounce today to close at 595. So if we violate this range, obviously you might want to reassess the thesis. But outside of that, if we can remain in that range, I think when it actually moves up again, which should be accompanied by any positive news or a raging bull market. Again, for me, the trade is always on the long side. Not that the trade is always on the long side, but you make more monies on the long side. Granted, I do know how to short and I do short stocks, but for me, again, the trade to make, for me, that those really high profits would always be on the long side. So anyway, so with a continued bull market or a raging bull market, I think that potentially with news can catapult this outside of its range and up to that $8 price target. So I'm still bullish on Zynga. If it violates this range that it's been trading in for the past we can say 3 months or so, then you might want to reassess your thesis. What else? And then we have ZTS, full disclaimer, full disclosure, another trade we took in the premium member community. We actually got into this trade when the stock was trading in the low 90s, and I've been talking about ZTS since it was in the 100s. Look what happened today. We closed at 121.17, up north of 8%. The high of the day clocked in at 121.81, and so I believe, if I'm not mistaken, we are now trading at all-time highs. Remember, and I've used ZTS as a perfect example. I've also used Zynga and Disney and some others. When stocks are hitting new 52-week highs or all-time highs, those are the stocks you want to stay with, even if they pull back, right? Yesterday, we had the pullback in ZTS. It went from a previous high of 117 to a low of 111. That was the prime opportunity if you understand how to trade, or how to at least trade a channel or a range, which I have linked a gazillion times. I'm not even going to link it anymore. If you want that video, just sign up at ShortMeTina.com and I will send it to you eventually. But for me, relatively easy to trade. They are relatively reliable. And again, ZTS respected its range that it started back in June. Now, this chart, in many respects, go and put Zynga and ZTS side by side. They are similar in the sense that, you have the run up, consolidation. So right now, I think Zynga is in this period, consolidation. So it had the run up. Zynga's consolidating the way ZTS did. And the reason that I'm still bullish on Zynga is normally what happens, and it's outlined with ZTS, it's once it breaks above that range, it usually goes on to trend up again, right? And that's what happened here. So we have the range, it broke through, we trended up, we established another range, it broke through, and for me, it looks like ZTS is ready to trend again. So do not be surprised to see ZTS at some point sitting at 150 or potentially 200. This is how these stocks tend to work. So again, bullish on ZTS, have it on your radar, have it on your watch list. No excuse. If you missed a run up from the 90s, shame on you. If you missed a run up in the 100, shame on you. Right now it's sitting at 121. It's looking like it's ready to leave the station. So still bullish on ZTS. What else? All right, and then we have ticker EVER daily chart is up about north of 50% on the day. So congrats to the bulls. I see a quote here of 1970. I'm going to make this really quick. Where do I see ticker EVER heading? Well, if you look right here, you can see back in June of 2018, the stock went as high as 2209. So for me, that's where it can potentially run into resistance. Potentially, possibly, if it gets there, you might see some selling. If not, if it actually breaks through that and hold, then I would go long. If not, I think once it hits 22, you'll see a bit of a pullback. What else? All right, so let's wrap it up and round it out with ticker AVID daily chart. It's off about 36% on the day. Ouch. You can see confirming volume here. A lot of sellers stepping in. We closed at 613. The low of the day clocked in at 604. So we closed relatively close to the low of the day. And when that generally happens, you see the selling continue, if not into the following trading day, but definitely the following trading week. So with ticker AVID, I'd be very cautious here. Granted, the stock is off about 36%. So you can always get that dead cat bounce, meaning you can see the stock go high as anywhere from 5 to 10, sometimes 15%. But even if it has that dead cat bounce, the overall trend, in my opinion, at this point, because we lost 36%, would be down. So I'd be extremely cautious with ticker AVID. Would not be surprised to see a print in the 5s. So let's cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. How did you fare today? Did you buy the market yesterday? Did you buy the market this morning? Did you go short yesterday? Did you go short this market? How did you fare considering what happened yesterday and what happened today? Again, comment in the comment section. 2, I do videos Monday through Friday. So if you want more, then definitely head on over to our YouTube channel at ShortMeTina. Make sure you are subscribed. And lastly, my friend, I've been trading for well over 15 years. If you think you can learn anything from me, then head on over to ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. I will talk to you tomorrow.